Welcome, G-Traders. As a rule, global stock market sentiment follows Wall Street trends. However, yesterday's trading in the United States was cautious and equity indicators closed slightly lower. On Tuesday, Asia-Pacific stocks and currencies were driven by local news. As a result, market indicators fell in Japan and rose in South Korea and Australia. The main source of optimistic news at the beginning of this week was China. It seems that Beijing has decided to radically help the ailing real estate sector. The country's authorities have encouraged the Chinese banks to provide unsecured loans to developers. Country Garden Holdings and Sino Ocean Group are among the 50 companies that will receive financial aid. In this way, real estate developers will be able to free up their funds to repay debts. It's expected to provide $446 billion to stabilize the industry and deliver millions of homes to customers. China's largest lenders, brokers, and distressed asset managers have been ordered to meet all reasonable financial needs of real estate developers. In addition, the People's Bank of China pledged to keep the yuan's exchange rate stable at a reasonable and balanced level. The US dollar came under further pressure early Tuesday as the yuan received support from the Chinese central bank. However, the greenback was able to recover quickly and posted gains in the intraday range of 103.00 and 103.20. However, the US dollar remains in the bearish zone below 103.30. In addition, the US currency is testing its lowest levels against six of its major counterparts since the beginning of the autumn, and the next support level for the US dollar index is at 103.07, a monthly low of November 28. The next resistance level is at 104.20, a weekly high of November 22. The greenback depreciated amid weaker U.S. economic data, and yesterday's report on new home sales was released. It showed a sharp decline in sales of new homes by 5.6% and became another argument in favor of ending the aggressive monetary policy of the U.S. Central Bank. However, markets are waiting for several more key reports as well as speeches from Fed speakers this week. The preliminary balance of forces does not seem to be in favor of the world's leading currency. At the beginning of the Asian trade, the US dollar weakened across the board, with the most significant selling taking place against the yen. The Japanese currency continued its bullish trend today, which began on a Friday of last week. The US dollar's price range against the yen has been gradually moving lower. During Tuesday's Asian session, the dollar-yen pair was trading within the 147.90 and 148.60 range. However, the pair failed to consolidate near 148. In addition, peers retreated as the dollar sell-off slowed down in anticipation of the key U.S. economic data. As a result, the pair reversed and climbed to 148.60 by the end of the Asian session. However, investors also keep an eye on the fundamental factors influencing the dollar-yen pair. While the US currency is losing on the softer outlook from the Fed, the yen is gaining support on hawkish expectations from the Bank of Japan. Inflation data suggested that the economy is making progress in achieving sustainable price growth. In the context of persistent deflation, such a shift looks positive. In addition, large employers in Japan plan to raise wages sharply in early 2024. In this case, the country's central bank may end its high-to-low policy. The yen will get additional support and be able to resist the US dollar more effectively. For the Australian dollar, it seems that the speech of the head of the country's central bank negatively affected the national currency. Today, Michelle Bullock said that it was necessary to curb inflation by raising interest rates with a caution. In addition, Australia's customer spending fell by 0.2% compared to forecasts. As a result, market sentiment changed and the US dollar halted the sell-off against the Australian dollar. The Aussie dollar pair traded in the range of 0.6598 and 0.6633, reversed and moved into the bearish zone. At the same time, the Aussie lost most of its daily gains and dropped below 0.66. On the other hand, the Aussie continues to be supported by positive news from China, which has strengthened the yuan and oil prices. Therefore, a new reversal in the Aussie's price may occur in the coming hours or days, especially after the release of fresh statistics from the United States. The New Zealand dollar also showed choppy trading today. By the close of the Asian trading session, the Kiwi increased above 0.6110, but then fell almost to 0.6080 in the very volatile trading. As for the Aussie, US economic data remains the key driver for the New Zealand dollar. However, markets will also keep a close eye on the Reserve Bank of New Zealand's decision on the interest rates. The regulator will hold the meeting tomorrow, even though the country's inflation slowed to 5.6% from 6%. It's still far from the regulator's target. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you soon.